Aurionpro Solutions. The stock is down 6% after the company reported a 29% growth in its revenue. Let's get in Ashish Rai, the Group CEO of Aurionpro Solutions, to give us more details on the quarter gone by. So Ashish, coming to you firstly on the revenue front. Yes, it's a solid growth of 28.7% that we are seeing on a YoY basis, but it is slightly below compared to what the guidance the company had given of 30%. So are you confident of achieving the growth guidance of 30% for FY26, which means that for the remaining 9 months, the growth number should be a little bit higher compared to what it was in the first quarter?
Hey, Sumit. Hi. So first of all, thanks for having me. I think between 29 and 30%, not a lot of difference. We feel good about the start. We feel good about being able to deliver to the guide overall. So we give guidance for the full year. We normally don't give a quarterly guidance. I think from one quarter to the next, and we always give guidance within a band. So from one quarter to the next, there may be a little bit of variation, but we feel good about the full year. Q1 is a solid start. So seasonally, it's a slow quarter for us, especially for the TIG side of the business, which is always a bit soft coming into the year, and builds up into H2. Right. So I think I would say for the full year, we remain on track. It was a solid Q1 from the sales standpoint. We picked up 16 new logos, entered many new markets. The channel is working. The products are working. Right. And we stay on track.
Right. If you could also take us through what has been the order inflow for the company in the first quarter currently, what is the order book size? Any details on that front?
Order book is at the largest we've seen, right? So order book now stands at about 1465 crores, which is a very, very strong order book. Typically, the way we declare our order books, it is essentially largely what is deliverable over the next 12 to 18 months. And we normally keep out the long-term AMCs and all this stuff out of the order book. So 1460 crores is a pretty strong order book to deliver the next 4 quarters and gives us a very, very strong visibility on what is to come.
But what was the order inflow, if you could share that detail?
So the way to look at our order inflow is typically, so if we've delivered a 330 crores quarter, so that is getting reduced from the order book more or less as it stands, and then you add on top of it. I think we finished last quarter at slightly over 1400 crores. So net addition would be, I would say, the revenue plus, let's say, another 50 crores, right? So the net addition is like 50 crores, 50 or 60 crores, right? So the overall addition to the order book would be what we consumed plus 60 crores.
Hi Ashish, this is Varsha here. Good to have you. Just wanted to have your view on margins. The current margins, if you see, is at 20% versus 21% last year. So considering the whole FY26, what is the margin expectation that you have?
Yeah, so Varsha, hi, thanks for the question. Look, our guidance for the full year remains where it is, which is where we said revenue will grow north of 30. EBITDA will stay between 20 and 22. PAT will stay between 15 and 16. I think we more or less we stayed within those bands in the quarter. The reason we give a 2% band on those margins is it's very hard for us to, at the pace at which we are growing, it's very hard for us to calibrate it down to a fine point. So from, especially on the year-on-year comps, they will vary for various reasons, right? So, and the margin will go up and down. If you're growing at 30%, you're building product at breakneck speed, and we expense out all the product build out. You're actually going into new markets, we're expanding the channels. So there'll always be a little bit of variance from one quarter to the next. Right now, the big moving, if I was to look at the comp, the year-on-year comp, I think the big moving part for us has been the sales channel expansion. We've invested heavily. I would say the sales channel probably has gone up 80 or 90%, the expense on that line, over the year, especially the expansion into Europe, which was a place we were not in. Now we've got a fairly good sized sales team and the associate support team in Europe, various places, UK, Nordics, in France, etc. We built out sales presence in North Asia, which we did not have before. We built out sales presence in Africa, we did not have before. So I think there is a lot more on that expense line. And there is obviously slightly elevated R&D expenses first half of the year, as I mentioned, in terms of or the vectors that we are, the two vectors we're investing on the AI side, right? So I think you'll see those variances, but by and large, I think it stays within the guided range, and within the range, it will go up and down.
Right. Ashish, also on the geographic mix now, I believe that the revenue mix is roughly stable at 60%, which comes from India, and 40% global. What are your expectations? I mean, in next 1 to 2 years, do you see this changing, or you want to keep the ratio same?
Yeah, so look, we've been both sides of the business have been growing at more or less the same clip, and that's the reason why the mix it goes up or down by a couple of points, but it's not really materially changed. We believe we've got over the next, let's say, 6 quarters, that will change into something closer to a 50-50, or maybe 52-48. The reason for that is, one, I think the US side has been grown reasonably well. We are making very significant investments in Europe, in Asia, excluding India, of course, in Southeast Asia and North Asia, and in Middle East and Africa, right? So I think over the next 6 quarters, the mix should change, and it's very hard to call how much that is, because of course we can plan things, but if both sides of business are growing at a very rapid clip as they are, I don't know of many organizations which for 5 years have grown at 30% plus. A lot of it changes. So it's not that the global pie does not grow, but the India pie continues to accelerate as well, right? So we'll see how it falls, but I feel reasonably sure that the mix will change in favor of rest of the world versus India.
And of the total markets that you cater, including India, which is that key market which will be the growth driver for Aurionpro going forward?
So we feel Europe will be a strong growth driver this year and next year. That is for sure in terms of geography. We are now expanding. We had our first wins in Q1 in 2 markets in Africa. We are now pushing heavily into North Asia. So I think some of that will grow as well, but I think Europe will be a key driver from a geography standpoint. In terms of the product mix, I think banking will grow very strongly globally. Transit will go strongly globally, and as well as in India. And the rest of the TIG businesses will go strongly in India, right? So I think that's roughly how the mix would be.
Right. And lastly, before we let you go, sir, the recent acquisition that you had done of Finexus, sorry if I'm pronouncing the name wrong, how much did that contribute to the top line, and what is the kind of contribution that you're expecting from this new acquisition for the full year?
For Finexus? So Finexus is a key acquisition for us in Europe, largely to sort of propel, have a much stronger sort of presence out in Europe to be able to deliver against the banking portfolio that we're taking there. From a revenue contribution standpoint, in the quarter, it's less than 1%. So it's not significant from a revenue standpoint, but I think overall, in terms of how it helps the rest of the Aurionpro businesses to expand in Europe, I think it would have a much bigger impact.
And just sorry, one more question here. What are the new product launches that you have planned?
So a lot of it, right? So on the transaction banking stack, we probably have one of the leading products in the market already globally. We intend to expand that in terms of presence around liquidity management, around supply chain finance. So I think that becomes a big area. We, together with Fintra, which is an acquisition we did in Q1, we intend to build out a very strong front to back trade offering in the trade space, which we are very excited about. On the transit side, lots of new product launches, especially as we are going in on the back office side and the software side. So there again, a lot of launches. Plus, on the AI side, we have made heavy investments around 2 different vectors. One is around the enterprise AI stack, including the investments we have on the explainability, interpretability side, where we run one of the top lab, basically the top lab, explainability lab in India. I think lots of offerings coming out there, as well as the AI enablement of the application stack overall, right? So that is the second vector. So there is a lot to come in FY26 in terms of new product launches. Very, very excited about that.
Ashish, also recently have signed a deal with the South African bank. Can you just help us with the deal size and any updates on that?
Yeah, so I don't know if we declared the deal size, but it's So normally we declare deals of those size if typically it's north of at least 30, 40 crores. So it's a significant deal size. It is the first win for our brand new corporate digital banking product in Africa against a fairly competitive field. So I think it is really a landmark win. It allows us to really get in on a fairly significant space through a cutting edge brand new digital banking product specifically focused on corporate banking. Very very positive on where that could go. A fairly significant win.